Does a 4% yield and a double-digit dividend growth rate sound good to you? Want to invest in a very simple business model with low operating costs? Interested in knowing about a dividend growth stock that I've recently been buying? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal six-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. We're off to a fast start this year. As I shoot this video, the S&P 500 is up by more than 9% in 2023. However, we had an epic collapse in 2022, so you have to keep some perspective here, and you always have to remember, price is what you pay, but value is what you get. Despite the run-up in pricing, a lot of names remain discounted relative to their value. Finding those deals is something that I take great pleasure in, and buying those deals is something that I take even more pleasure in. Well, I have been buying high quality dividend growth stocks, and I think there's one name in particular that is worth your attention. Today, I want to tell you about a dividend growth stock that I recently bought for the Fire Fund. Ready? Let's dig in. The dividend growth stock that I recently bought for the Fire Fund is CubeSmart, stock ticker CUBE. CubeSmart is a self-storage real estate investment trust. This $10.5 billion by market cap, self-administered and self-managed REIT is focused on the ownership, operation, acquisition, and development of self-storage facilities in the United States. I love this business model. A self-storage REIT is a low-cost form of real estate because self-storage buildings are not complex to build and they're not expensive to maintain. Ongoing CapEx needs are minimal. You don't need many employees to actually run a facility once it's built, as the customers, once they're onboarded, are doing most of the work, moving stuff in and out of the facility. Because of the low costs, you can generate high margins and benefit from fairly low break-even rates when it comes to occupancy. But occupancy is not a problem. Why? Because Americans, they like their stuff. Moreover, once stuff is in a storage facility, there's a certain stickiness to that. Inertia is a powerful force, and people tend to be loath to get rid of their possessions. That's why CubeSmart's Q3 fiscal year 2022 report showed that same-store occupancy during the quarter averaged 94.4%. And while CubeSmart is maintaining a high occupancy rate, they're doing so with short leasing structures. This allows the company to adapt to changing economics very quickly, which is unlike most other REITs that feature long lease terms where they lock in rates. Let's talk about the property portfolio here. CubeSmart owns over 1,200 properties across 39 US states. The REIT focuses on major markets, giving them pricing power and demographic advantages. And with over 700,000 customers, there's plenty of customer diversification here. Total assets of $6.5 billion lines up against $3.7 billion in total liabilities. The REIT gets investment-grade credit ratings, BBB from Standard & Poor's, and Baa2 from Moody's. What CubeSmart brings to the Fire Fund is a great combination of growth and yield. CubeSmart has more than tripled its revenue over the last decade. Of course, they've been acquisitive. That hasn't all been organic, but even on a per-share basis, the numbers are still fantastic. Adjusted funds from operations per share has compounded at an annual rate of 12.4% over the last decade. If we zoom in on the most recent quarter, which was Q3 fiscal year 2022, CubeSmart printed 23% year-over-year revenue growth. Adjusted funds from operations per share came in at 66 cents, a 17.9% increase year-over-year. This kind of business growth is why we see phenomenal dividend growth. The REIT has increased its dividend for 13 consecutive years with a 10-year dividend growth rate of 18.3%. Amazingly, the double-digit dividend growth persists. The most recent dividend raise, which was announced in December, came in at 14%. The new quarterly dividend is 49 cents per share. Meanwhile, CubeSmart is guiding for $2.51 at the midpoint in adjusted funds from operations per share for the whole of fiscal year 2022. That puts the payout ratio at 78.1%, which is a tad high, but not unreasonable at all for a REIT. Love the growth, but I really love the yield. Indeed, the stock is yielding 4%. That's a pretty high yield in absolute terms, but it's also high in relative terms. It's significantly higher than the broader market's yield. It's also 20 basis points higher than the stock's own 5-year average yield. So this is a stock that usually offers an above average yield, but it's especially high right now. This kind of yield isn't super difficult to find in this market. What makes this dividend growth stock a bit unique is the growth you get with the yield. It's that combination that is so appealing. And it's this combination of growth and yield that has led to spectacular returns. The stock is compounded at an annual rate of nearly 16% over the last decade. If you can compound your money at 16% annually, you're going to become very wealthy over time. The S&P 500 is typically compounding at about 10% annually over the long run, and we can see that play out over the last 10 years. It did something pretty similar to that, but CubeSmart is running circles around the broader market, both in yield terms and total return. It's the best of both worlds. But wait, there's more. The stock is also attractively valued in my view. It's pretty rare that you get this kind of yield and growth wrapped up into one package, but when you do find such a package, it's typically expensive. Not in this case. Using that aforementioned guidance, the forward price to adjusted funds from operations ratio is 19.3. That's somewhat analogous to a PE ratio on a normal stock. Is a 19.3 multiple unreasonable for a high quality compounder yielding 4%? I really don't think so. We can also see that the current price to cash flow ratio of 19.5 is a bit lower than its own 5-year average of 19.7. I'd say that we've got a decent discount here. Not huge, but decent. And that is why I bought this stock myself. I initiated a position in CubeSmart for the Fire Fund in December at $43.20 per share, and I allocated more capital to this idea throughout December and January, with my most recent purchase occurring in January at $39.51 per share. Of course, I alerted my patrons over at Patreon about these moves right after they were made. The stock was quite a bit cheaper when I was buying it, which made the valuation that much more attractive at the time. The stock has gone on a huge run, up more than 20% on the year already. Is it now too expensive? No, I don't believe it's too expensive. The numbers I've been giving are all current. As I shoot this video, the stock is priced at about $48.50, so that's where I'm gauging things. As I just said, the cash flow multiple is actually below its own 5-year average, and the yield is above its own 5-year average. In my view, this stock went from noticeably cheap to less cheap, perhaps even something close to fair value, but I don't think it's necessarily expensive either. At 20 times adjusted funds from operations, or something along those lines, I'd say you've got a fair deal. That would put the stock at right about $50. We're getting close to that level now. If we get into the $55 range on the stock, that is when I start thinking it's expensive. Now, the business isn't perfect. Every business has risks. Every business has drawbacks. No business is perfect. Litigation, regulation, and competition are omnipresent risks with every business. Beyond that, some things to be aware of with CubeSmart specifically is the sensitivity to the housing market, interest rates, and the overall economy in the US. Those short leases can work against the firm as customers, well, they can just leave. Also, it's difficult to build durable competitive advantages here. The basic business model is very easy to replicate, making competition fierce. So should you buy this stock? Well, that's your call. Depends on your portfolio and what you're looking to do with it. But I think CubeSmart offers a compelling total package. You get a 4% yield, double-digit dividend growth, and market-beating performance. Yet this all comes at a valuation that is very acceptable. It's at least worth having on your radar today, but a 10% correction back to the $44 area would make this a very interesting idea for long-term dividend growth investors. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about this dividend growth stock that I recently bought. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also, take a look at the description box below for some important links, including a link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I made my portfolio entirely accessible over at Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alert. I'll see you next time.